Welcome once again to the Allon Exchange with Jay and Brittany Hagy. They are the founders and financial advisors of Allon Planning Partners. I'm your host, Mike Spangle, and we love to have you join us for Retirement Planning Solutions. Brittany, Jay, it's awesome to see you guys again.
Yes,
so good to be here.
As well.
We have an exciting topic for today. Please do not change your channel. I know it's not everyone's favorite topic, but we want to talk about taxes. And I've started to like talking about taxes, but because I realize it's saving more of my own money.
Yes.
Yeah.
But it can be complicated. And normally people just think about taxes, well, you know, around the beginning of the year, like this
right
program
now.
is airing right now. And then we go into our tax office before April 15th.
Yep.
But tax planning for retirement is completely different, and there's a few changes to this new year, so we want to be aware of those, right, Jay?
Everybody loves to pay taxes, right? Everybody gets to pay taxes, and that's the truth. I did want to share something from a Peanuts comic. You know Snoopy, right?
I am the biggest Snoopy fan. Everybody knows
And so
I am.
here's what Snoopy says. He says, "Dear IRS, I'm writing you to cancel my subscription. Please remove my name for your mailing
Oh,
list."
if it was only that easy.
Love that.
And
I
so
would love that.
we would love to have our name removed from the IRS mailing list sometimes, right? But you know, tax planning is super important to what we do as financial advisors because a lot of times folks get stuck in the just the optimization of their allocation in their portfolio and how their 401k or their IRAs aligned. But it's really not just about what you make; it's about what you keep. And so that's where we come in and try to help make tax efficiency a priority in what we do for financial planning. So I don't know if you're listening out there and you've maybe thought about how are the assets that I have in these IRAs and 401ks, when I go to use them, how are they going to be taxed? What rate are they going to be taxed at? Unfortunately, not all that money in the 401k or IRA is ours to keep. We have a partner, and his name is Uncle Sam, and he's going to want to come after some of those dollars, even when we get into required minimum distribution ages and things like this. But we want to talk about a little bit of all of the tax implications of your funds today on the show.
And I think it's important to differentiate between tax planning and tax paying. Because a lot of people think tax planning is, okay, let's look back and see what I owe from the previous year for this year's taxes, right? That's tax paying.
That's right.
Not tax planning. Tax planning is looking ahead as to how taxes
gonna
will
affect you.
impact our situation in the future. So if you need a visual image, think about sitting in the driver's seat of a car and you're looking in the rear view mirror. That's tax paying. You're looking behind. But if you're looking through the front windshield, that's tax planning. That's looking ahead and planning for the future.
Yeah.
That's what we want to focus on
And so
today.
let me give you an example of that is because we had someone come in just 2 weeks ago who had owned their small business for over 25 years. And they have been self-employed. They've been getting their own income. They did not really have a tax plan. They've been saving money, doing well. They've amassed a lot of money. But I kind of opened their eyes to, you know, how have you looked at taxes in this? And so I showed them a SEP IRA. Now, a SEP IRA for a self-employed individual, you can put up to 25% of your take-home pay into basically a 401k vehicle for you, up to a certain limit. So 2023, that was $66,000. 2024, it goes up $69,000 that you can put into this self-directed IRA. And so when I shared with him, hey, do you know if someone that made $200,000 in the year, do you know that you could take $50,000 and put it in a SEP IRA and not have to pay the government taxes on this year?
It
was huge.
A huge concept.
Yeah.
A huge concept for private business owners.
Absolutely.
Because we hear this all the time. My business is my retirement plan.
That's right.
That I'm going to sell this, and this
That's
is
right.
what's going to. And I'm sorry, but sometimes the business fails, industries change, different product offerings
Anything can
are
happen.
needed. And when you lose that business, you lose your ability to retire. Look, it's the small business which is the backbone of America.
That is 100% right.
And we've got to try to talk to the small business owners and say, look, you've got to save for yourself too. You've got to save for your family.
And as a small business owner, there are so many things that are accessible to you that are not accessible to others who do not own their own business like that. So this is just one example of tax planning at its finest for small business owners. And again, there's just many other options.
And we want to say that for folks out there. Look, if you're a small business owner, you might think that your business acumen and what you're doing, I don't care if you're making rowboats or you bake cupcakes for a living, you have your own shop. I know that you're probably focusing on your finances inside the business, but get your own financial planner who can
100%.
help you map. You're doing
Right.
this business, so hopefully someday either you can retire or pass it on to the family.
Especially since
Right.
we live right now in a lot of this area is known as the gig economy.
Yeah.
So, and everybody's doing their own little gigs, side gigs. And even if you work a W-2 job and you're making money on the side doing something else, how do you best utilize those dollars to save for retirement? And how do you keep it and shield it from Uncle Sam?
Yeah,
That's
and as
what
more
we're trying
folks
to do.
are expanding out and branching out into their own business ventures, many people are just unaware of what's available to them as business owners. There are tax benefits to you that you can implement that make a massive difference in the bottom line when it comes to your tax bill. Again, not just current year, but looking ahead and planning for your future, planning for retirement, planning for your children's education. There are so many options available specifically to you small
Yeah,
business
and I do
owners.
want to say we work with a lot of W-2 wage earners as well. So we want to speak specifically to those who are self-employed. Maybe you have a side gig, like I said, but we also work with just a W-2 wage earner. How do you optimize your portfolio, and how do you optimize your tax plan so that you're not just paying taxes, but you're planning
right.
better for taxes?
Right.
And so that's why we would offer you to come in and sit down with us and see. We make these plans individualized. We make them customized to you. Whatever that looks like, whether you're just making a W-2 paycheck or whether you own your own business and you have for years and years and you don't know if your plan's optimal or not. You're just paying taxes every year and trying to save as much as you can. And that's okay, but we want to make sure that it's optimized so that you are putting away the correct amount of dollars and that you're shielding them from a large tax bill that you could have.
I know you're always helping people with education, so right now on the bottom of the screen, we have a complimentary tax guide. Now, we do really encourage you to either talk with your CPA or talk with a financial professional who can help you with your taxes. But we'd also like to get this tax guide into your hands.
Yes.
A couple of different ways. You can call the phone number or you can use that QR code. Open up your phone to the camera function and point it at the black and white box there, and it'll take you over to our landing page, and you click on that so we can get you that tax guide. Now, what we further encourage you to do, though, is to make a plan and come in for an appointment. I just fear that usually you're having to retrain most CPAs that you work with your firm. Because as you said, most people are looking in the rearview mirror and
That's
saying,
right.
I want to pay as little in taxes this year as possible. But that's not retirement planning for
Yeah,
taxes.
it's really about us as financial professionals working with your CPA. If you have one, we'll work with them.
That's
if you
right.
don't, we have CPAs in our office
That's right.
that specialize in tax law that you probably don't know about, right? So we work together really closely with CPAs to ensure tax laws abided by, and that we are maximizing
That's right.
your tax scenario, making the most of your money where you can keep the most within the tax guidelines.
That's
So
right.
rather than having to call two different professionals, you can do it all right here. Your investment planning, your retirement planning, your estate planning, and your tax planning.
Right.
All under one umbrella. Call the Allon Exchange right now. You can use the phone number down here on the bottom of the screen. In fact, don't go anywhere. We have an important message on the complimentary tax guide following this. We'll be right back with Jay and Brittany after this message.
Well, about almost 10 years ago now, Brittany and I came to the realization that the position that we were in, we wanted to expand what we were doing. We were in full-time ministry. And so I realized as I was counseling people a lot, it had a lot to do with finance.
Because finances are a touchy subject. It can be challenging, and that's what we want to do, help people prepare for those unexpecteds.
I had a friend at the time who was in the industry and ran an RIA and decided to, take a sneak peek into what he was doing, and really, loved the model of being able to be independent and fiduciary in our advice and the way that we help people.
And when we decided to begin our own independent firm, we knew there's a better way. There's just a better way to do this. It's beyond transactional interaction. It's this relational component that we knew we want to have. And I believe that each individual and family has to find the right fit for them.
And I think most people that walk in here are looking for that unique touch, like independently, how can we help your family succeed?
Welcome back to the Allon Exchange with Jay and Brittany Hagy. They're founders and financial advisors of Allon Planning Partners, and I'm your host, Spike Spangle. We're talking about retirement planning as we always do, today with a tax lien. Wait a minute, though. When I say lean, I don't mean
We don't want to
L-E-I-N.
lean. We don't want to lean.
L-E-A-N.
Right.
We're
That's
leaning
right.
into
Leaning
taxes.
into
Clarification
taxes.
there.
Jay, we've got so much to pack in on this. So what
Absolutely.
do we need to consider? Why are taxes so important?
So anytime that I'm meeting with individuals or I'm teaching an educational workshop, I'm asking this question. Where do you think taxes are going in the next few years? Do you think they're going down? I can promise you from my seat on the bus, they probably won't go down.
Yeah.
Because our federal debt, limits are out of control. Our spending's out of control. We just passed $34 trillion in the debt, in the spending, and what we owe back on our taxes. So I don't see us going down. The tax law that we're under right now from 2017 is one of the lowest in history. And so with that being the case, 2025, at the end of 2025, they're set to go away. They're going to sunset. The provisions, a lot of those provisions will no longer exist, and tax rates will automatically reset if Congress doesn't do anything about it. So I would imagine that we have to talk about taxes because they are going to continue to go up. And so what do we do? What's our options?
And $8.9 trillion are in 401ks and retirement accounts. What do you think that looks like to the government? That is a big cookie jar, a big bucket of money that they can pull from, right? So, I mean,
And this is what
a
we've been
ton of
socialized
money.
for 4.5 decades, coming up on 5 decades,
That's
to
right.
save tax deferred, with the carrot and the stick of being the carrot being you'll probably be in a lower tax bracket when you get to retirement. But the
what they're
stick
saying.
is what we're about to get hit with.
That's
You're
correct.
just saying tax is probably going
Right.
up, and if everybody knows that 8.9 trillion, maybe 9 trillion soon, is sitting in our tax deferred accounts,
That's right.
you're saying, well, I remember there were some people who ran on a political platform, and let's stay away from that rail, but they're coming after our 401ks. It's not that the government can
That's
seize
right.
them. It's
That's
that
right.
they're going to come after them in a tax way, right? They
They're-
know that money is sitting there.
In quite a few ways they're going to do that. But, ultimately, if you've tax deferred all of your dollars in a 401k or an IRA right now, there is an unknown tax bill waiting on you,
Yeah.
right? Right now, we know that we're in lower tax rates than we've ever been. So you want to make sure that you're putting an individualized plan together that may include Roth conversions. Roth conversions isn't great for everyone, but it could work for you in your situation. If you know the tax dollars that you're going to pay today, why not dip out of some of that money and go ahead and put it in a tax-free bucket, which is a Roth, so that they can grow tax-free from there on out. You may want to start contributing more to a Roth. If you have a Roth 401k at your work, this is a big one we want to talk about. You want to make sure you're taking advantage of that, because there's one key that a regular Roth IRA and a 401k Roth has that differentiate each other. And that is a Roth 401k, there is no income contribution limit. So you can only contribute so much, but from an income standpoint, there's no income guideline that says
no
I
limitation.
can no longer contribute to a Roth IRA.
With a Roth IRA, there are limits as to who can contribute to
Right.
those, right?
That's
what
right.
we're talking about here.
I think single or something was something like 144,000.
That's right.
Maybe
Married
it's
is
gone up.
214,
and it's the
something like
biggest. It's the biggest misnomer everybody has out there. It's the biggest mistake everybody makes. They say I make too much money to
Right,
contribute to
right.
a Roth. Not when it's a Roth 401k.
That's correct.
You can have very high earnings and contribute just as much as you can to your regular 401k.
Which, if you have that option available in your 401k, man, you should be tapping
We should be
into
taking
that.
advantage of that.
The caution,
Big benefit.
The caution, though, is of course that if you're putting money into a Roth, then you don't get to subtract that.
That's right.
from your
It's not
taxes.
tax
deduct
deferred.
that.
Right.
But we can calculate where your taxes are today versus an unknown rate that we're trying to guesstimate for the future, right? And so that is what true tax planning is looking 5 years, 10 years, 15 years in advance, not just looking at rearview mirror, like you said, and what am I supposed to pay this year based on what I did last year? So there's a balance there. You want to make sure that you are deferring some, because it may help you on taxes this year, but there also may be a bucket that we would say we want to go ahead and pay taxes on this year because we know the rate, and get those in a tax-free bucket so they're growing tax-free.
Real strategy. You have to really create a strategy when it comes to taxes, considering all those factors. Like you
And
were
it's
just
so
talking about.
individualized.
It is.
And that's what
Very
you need to
personal.
know if you're sitting at home is like, well, how much? What's the percentage I should be putting in my Roth versus my traditional? That's something we can't give you right here through the airways, but we can give you if you come and sit with us. And you know, we talk a lot about this in our book as well. We have a whole section dedicated on tax planning. We have a tax guide that we're offering you today. We want to get as much education in your hands on taxes as possible because we want to save you dollars. We want to make sure that you're not just making money and that your portfolio is working correctly, which it should be, but we want to make sure that Uncle Sam's not coming back behind you and trying to rake up more than his fair share.
That you're not overpaying. So many people are overpaying in taxes unnecessarily just because lack of knowledge or understanding where and how you can save. So don't be stuck in overpaying. Get a review, a tax review to ensure you're not in that position.
What I want to be clear on is when you're saying overpaying in taxes, it's what they're overpaying in taxes in retirement. Because most people right now, they go to their CPA again and say, I want to pay as little in taxes this year as possible. And they say, well, max out your 401k. And we're not saying don't use your retirement accounts at work. But what you're saying is they pay so much in taxes in their retirement years.
I'm actually saying all of it. That is a big piece, absolutely. Overpaying in their retirement years because of a few reasons. Lack of planning, right? And they're in a position where they don't have a choice, which is not the best place to be. So that's one. But then also annually. So many people are doing that as well throughout their lifetime just because they're unaware of tax breaks and benefits that you might have, like we talked about for small business owners and things like that, just unaware of what's available to you. So both and current years in and well into retirement.
And so that is a strategy of how do I contribute to traditional tax deferred account versus a Roth account. But let me also give you an example of a Roth conversion because we had a gentleman come in, I guess it was back in 2022, is when we had a little bit of a dip in the market, right? The market went down. And so, you know, we want to look and say, okay, what can we do to optimize portfolio performance, but also how can we save you in taxes?
Minimize taxes.
So we took a strategy to say, let's take a little bit of those funds and convert them over to a Roth bucket and put them in a tax-free bucket. Well, what happened in 2023? The market went back up and swang up, you know, 23 to 26% on the indices. And that being the case, all of the gains that he took with him that he now contributed to that Roth conversion now is tax-free. And so he basically got a discount whenever he on a tax rate, and he got a discount from when he brought the gains so that he does not have to pay taxes on those gains going
And
forward.
it wasn't necessarily timing the market. He just took advantage of the situation that was going on. Everybody could see that the markets had slumped in the middle of the year. And if you can save 10% on those taxes because of losses, that's what Jay and Brittany are talking about here. Take advantage of the opportunities that are out there. It's not timing the market. It's not guessing. We're just evaluating what's going on and taking a look at your tax bracket. So one of the things we'd like to do is get you the new tax guide for this year. You can call the phone number down on the bottom of the screen, or you can use that QR code with your phone, open up the camera function and point it at the black and white box there. Click on it. It'll take you over to our landing page. But even more importantly, whether you're on your own, married, small business owner, if you're right here in Tennessee and you don't have a tax financial professional helping you get to tax-free income streams in retirement, call, make an appointment.
That's right.
Come on in, meet with Jay and Brittany. More of the Allon Exchange right after this.
Hi, I'm Jay Hagy, owner of Allon Planning Partners. Well, you've probably heard a lot about Roth conversions lately. First of all, what are they? And second of all, how could they benefit you? A Roth conversion means getting your money out of those tax-deferred accounts like 401ks and traditional IRAs where you've been kicking the tax can down the road for so many years. But really, the question should be, is kicking it down the road really in your best interest? You have a partner in those deferred accounts. It's Uncle Sam. And Uncle Sam is going to take his cut from every dime that grows in that account when you decide to take it out. So let's give Uncle Sam the boot from those retirement accounts and let every penny of future growth be tax-free. Well, with the highest national debt we've ever seen, taxes are not likely to decrease anytime soon, placing a giant tax bullseye on your back. So a Roth conversion is getting your money out of those tax-deferred accounts, paying the taxes now while they're on sale, by the way, and then getting them into accounts where your future dollars can grow tax-free the rest of your life. To experience this tax-free retirement, you do need to sit down with a fiduciary, someone who specializes in retirement planning. So just call the number you see here or scan the QR code and let us help remove that tax bullseye off of your back.
Welcome back. We are with financial advisors Jay and Brittany Hagy, and today we are talking about tax efficiency. I'm your host, Spike Spangle. Love that you've come back. Once again, we like talking about retirement planning, and today's focus has been on taxes. Let's talk about solutions. We tell people about solutions. We're not just talking about it. We are not clickbait. We don't say, here's what's important, and then not give you what to do.
Right.
You're going to tell us some options where we can take control.
That's right. There is always a solution. We are solution-based within our practice. So we talk so much about solutions. So let's dive in. So we know there are potential tax issues, right? A lot of people are overpaying. That's what we've talked about in these last few segments. So we have some options. What do we do? Well, first, we can do nothing or kind of procrastinate, just go with the flow, which a lot of people do. We find a lot of folks kind of fall into this category. Let's just pay what the CPA says I have to pay, or what my tax software says I have to pay, and that's that, right? So that's an option, maybe not the best option, but that's an option. Or we can pay taxes now, too. That's a second option. We can pay taxes now at known rates versus waiting and paying unknown rates in the future, which we talked about in the last segment. We certainly expect to see tax rates go up. That's something that we probably all would agree on. We see that coming. So we can do it that way. There's some strategy in that, too. What should we pay now? What should we not? Or third, we could really plan. We could really not just look again at the current year, but look at subsequent years, look at what is ahead and how we can really strategize and put together a plan to best position us currently when it comes to taxes, but also looking at 5 years down the road, 10 years down the road, 15 years down the road. If taxes do increase, how will that impact my retirement? How will that impact what I'm withdrawing from my savings accounts and retirement accounts and investments as I use that to live off of in retirement? And that is the best solution, to really plan, to sit down with financial professionals who are independent and fiduciary that can walk you through tax strategy hand in hand with a CPA to ensure that you are maximizing your dollars, making the most of what you have, and paying the least amount in taxes that's possible.
Yeah, and some of those strategies include things like contributing to a Roth or your 401k that is a Roth, Roth conversions, which we talked about, backdoor Roth, which we won't really get much into, but you can have the opportunity to get it into a traditional IRA and then convert it to a Roth IRA. You can do that. You can also want to take advantage of planning for RMDs, which are required minimum distributions. So what this looks like, it used to be at 70.5, and the laws changed over the last couple of years. It's now 73. So at 73, Uncle Sam's going to come knocking at your door, and all these tax-deferred dollars that you put away in an IRA or a 401k or a 403b, he's going to say, okay, you need to take a certain percentage out now, not because you need the money maybe, but because I want my tax dollars. And so how do we put a strategy together that takes advantage of when you should be taking out of these accounts, not just letting Uncle Sam tell you when you have to take out of these accounts?
Right.
So I've told folks this a couple times. Do you think it's generous of Uncle Sam to be backing up these dates? It used to be 70.5, now it's 72, 73. In 2033, it's going to 75. And some folks are going like, well, that's a good thing, right? Like, I don't have to take out of these accounts until I'm 75. Folks, in my opinion, the U.S. government wants you to wait as long as possible to take money out of these accounts. Why? Is because most of the time when people inherit funds from their parents or grandparents, are they in the lowest earning years or the highest earning years of their working career, right? It's typically they're in the highest earning years. So the more money you pass along, they may not get it out of you, but they will get it from your children. So it comes into
At a higher tax rate.
At a higher tax rate. So it becomes into legacy planning at this point. If we can get it out at 12%, let's just say now, and you're 73, versus passing it on and giving it to your kids at a 30% tax rate.
Big difference.
You think the government would rather them pay 30% or 12, right?
And as far as the legacy planning, you want to talk about sunsetting. It's not just the tax brackets they're talking about sunsetting. They're also talking about taking down the estate planning brackets. So right now it's like 12.9. Let's call it 13 million that you can pass on to your heirs, your children. They're talking about maybe cutting that in half, maybe even more.
Right.
So you got an $8 million account or $8 million worth of assets. You pass it over, government's going to do 50% of that.
50%. It's a huge amount. And so what we want to do is make sure we put a rock solid plan together for whoever we're setting in front of, right? Because these are things that are very individualistic again. It's nothing that you could just say, hey, throw out a percentage today of what I should be taking
Right.
out of my account. We have to know specifically where you are in this financial journey, where you're trying to get to, and how we can save you as most amount of money as possible. And one of the ways we want to do that is getting this tax guide in your hand. If you would call the number below for a complimentary portfolio review, we'd be glad to sit with you and go over your specific tax strategies with what's going on
Right.
in your life, and whether you should be taking money and converting it to a Roth, or whether you should be taking advantage of a qualified charitable distribution, which we didn't even talk about, which you can actually take your required minimum distribution and send it directly to a charity to where those tax dollars don't fall directly in your name. There's plenty of strategies that we have for you if you'd be willing to take advantage of the portfolio
and
review.
one big component of what we do and how we do what we do is about education. We want to offer, as we've already said, solutions, creative solutions for you to get to where you want to be. And we've put together the Allon approach. This is our book, and it talks through so much of what we've discussed today, in addition to all the other components of what a comprehensive financial plan really is. And we want to get this into your hands because it's a resource. It's a resource guide, and it's actually a workbook as well. In each chapter, there's a section where it asks you questions and how do you apply what you're reading, and it gets you thinking about your specific situation, because it's not just knowledge that makes a difference, but it's knowledge plus your action that really produces some change in the positive direction. And that's what we want to help you get to, a better place than where you currently are. We want to help you build that better foundation and be able to experience the retirement you want, and even the now you want. You don't have to wait till retirement to experience that. So this is a resource that we have created just for you. There's no cost to this. If you give the number below a call or scan the QR code on your screen, we would love to offer this with a complimentary consultation. When you come in and sit down with us, this is one of the resources you will receive as we meet together.
We covered a lot of different topics, but we know that the tax code is actually thousands and thousands of pages.
Wow.
We've done all that we
Yes.
can in one program,
Yes.
but you want to make sure that you get to be as tax efficient as possible, and Jay and Brittany are offering as many tools as they can. Also, you can get a complimentary copy of their book and the tax guide. But even better yet, when you call, say, you know what? I'd really like to work with somebody who can help me put this all together. Make your appointment so we can come in and do your total complimentary portfolio review. Call the phone number you see here. For Jay and Brittany, I'm Spike Spangle. Thank you for watching the Allon Exchange. We'll be back next week.